In September 2019, Smile Direct Club went public with an IPO priced at $23. Since then, the price has dropped dramatically, but has the company story really changed? Hi, I'm Christian. In this video, I'll break down Smile Direct Club and help you determine if it's a good investment. Smile Direct Club sells clear aligners to help people get the smile they want. They compete against traditional treatment methods like braces and Invisalign, who is the first mover in the clear aligner market. Smile Direct Club is a disruptor in this market, building a billion-dollar company only 5 years in. The reason Smile Direct Club is growing so fast is because they have a really compelling value proposition to consumers. There's 3 benefits that really stand out to me. First, it's more affordable. It's 60% cheaper than braces, which they strongly promote with the headline on their website. Braces typically cost $5 to $6 grand, while Invisalign costs $3,500 to $8 grand. Smile Direct Club has 2 pricing options. You can pay $18.95 up front, or they offer a financing plan called Smile Pay. That's $250 up front and $85 per month for 2 years. The second benefit is convenience. They are the first direct-to-consumer clear aligner company, which means you don't have to go to all those ongoing orthodontist appointments like you would with braces and Invisalign. The third benefit to the consumer is speed. A typical treatment with Smile Direct Club takes 4 to 6 months, while the nighttime only option takes 8 to 10 months. Both options have faster treatments than Invisalign and braces. On average, Invisalign treatment time is about 18 months and braces are 18 to 24 months. Affordability, convenience, and faster treatments make Smile Direct Club an obvious choice to many consumers. Of course, none of these benefits would matter if their clear aligners didn't work. After researching customer reviews all over the internet, the evidence shows customers get great results. The company has received some negative feedback on social media, mainly because of delays in deliveries. This is an issue Smile Direct Club addressed in their most recent earnings call. Manufacturing efficiencies were the problem, and they are making changes to make sure all of their clients get their aligners on time. They also put out a press release committing to improve their customer service. That's an encouraging sign, but what really mattered to me is if their clear aligners actually worked. I think the answer is in the numbers. They've treated over 850,000 people, and the results are overwhelmingly positive. Thousands of people have posted positive reviews online, which is important because social media plays a big part in the success of the company. They have over 65,000 Google reviews at a 4.9 average star rating and 170,000 reviews on their website with an average 4.6 star rating. The huge number of positive reviews and all of the before and after pictures and videos on the internet provide plenty of proof for people who want to straighten their teeth. I was skeptical of Smile Direct Club too, but social proof is one of the most powerful forms of persuasion. My sister-in-law got great results, and all the positive reviews on the internet convinced me it was worth a shot. I bought nighttime aligners from Smile Direct Club to fix the gap in my front teeth, and they'll be delivered to my front door in a couple weeks. Now that you know their company story, let's move on to their market and competition. The total size of the market is up for debate. Smile Direct Club says there's a worldwide opportunity of 500 million. Align Technology, makers of Invisalign, say that number is more around 300 million. Both companies are calculating the potential market size based on the estimated number of people with malocclusion, the misalignment of teeth. As an investor, the potential size of the market is attractive, but those numbers are certainly optimistic. The latest data I could find showed that 12 million people elect treatment by orthodontists worldwide. In 2019, Smile Direct Club shipped 453,000 unique aligners, which gives them 4% market share. There's no doubt that Smile Direct Club will continue to grab more market share of the 12 million annual cases, but what will be really interesting is to see how much they can expand the current market beyond 12 million people. I think affordability alone, especially Smile Pay, opens up the opportunity to millions of people who couldn't afford orthodontic treatment in the past. Just like Uber and Lyft expanded the ride-sharing market way beyond the taxi market, Smile Direct Club is planning on doing the same thing. And just like Uber and Lyft, there are challenges along the way, and for that, you want a good leader. As a disruptor, it's only natural that powerful organizations and people will push back when you go against the status quo. And that's what's happening to Smile Direct Club. Most notably, Smile Direct Club received some bad press from NBC News when they questioned the safety of their aligners. Obviously, this was a concern that needed to be addressed. The response from Smile Direct Club and their CEO, David Katzman, made me feel like the company is in good hands. The day after the NBC report, Katzman wrote a post on LinkedIn strongly rebuking the report, and Smile Direct Club sent a letter to NBC News legal counsel that lists more than 20 concerns with the report, detailing how NBC News left out crucial facts in its story and questions the validity of multiple sources. The quick and detailed response impressed me. I like that their CEO is a fighter because there will be more challenges to come. All right, we've looked at their story, market, competition, and their leadership. It's time to come up with a value for Smile Direct Club. As I mentioned at the beginning, the stock price has really tumbled since the IPO. The stock price is down to below $5 as I'm recording this video. An overpriced IPO, adjusted growth expectations, shipment delays, coronavirus, all of these things played a part in this down period. On the last earnings call, Smile Direct Club announced they are going to focus on profitability and improving customer experience for all their members. To do that, they'll need to slow their growth rate and fix the manufacturing issues they had. After seeing revenues grow 77% from 2019, they're projecting revenue growth of 40% in 2020 and 20 to 30% growth beyond 2020. With this in mind, I used their estimates to project revenue growth in my 10-year discounted cash flow analysis, and I came up with a valuation of $11.40 per share. Since I made my valuation, coronavirus has taken a toll, and revenue growth will almost certainly not hit anywhere near 40% in 2020. By changing the estimated revenue growth to 20% for 2020, the updated valuation is $9.85 per share. While I believe the short-term outlook has been affected due to the slower growth projections, manufacturing concerns, and the coronavirus, the long-term story hasn't been affected one bit. I believe they'll focus on growth again when they know they can handle it. In fact, on the earnings call, Katzman said, if we have the infrastructure and the capability to grow quicker than this, then we certainly will. It's not a market issue that's causing the limiting growth that we put in for 2020 and beyond. It truly is what we believe the business can absorb on an annual basis from net new business and still provide the best club member experience. As a short-term trader, I don't know if Smile Direct Club is a good investment or not, but long-term, it's a great company to own. I bought the stock at $5.22, and here's why. First, I think the safety concerns of the aligners are overblown, and it'll start to fade away. In fact, the American Association of Dental Boards recently announced they embrace teledentistry in a big win for Smile Direct Club. In addition to safety concerns going away, manufacturing will continue to improve. They control their entire supply chain with vertical integration, which will lead to a higher operating margin. Revenue will continue to grow, and I think their growth strategies look promising. I really like the partnerships they built to acquire new customers and reduce customer acquisition costs. On the retail side, they have Smile shops in Walgreens and CVS stores across the country where shoppers can get a free 3D scan of their teeth while they are shopping. On the wholesale side, Smile Direct Club announced that dentists and orthodontists can partner with them to sell Smile Direct Club's aligners to their patients. There's lots of room to grow in the teenage part of the market. Over 2/3 of the 12 million annual cases are teenagers, while only 5% of Smile Direct Club's members are teens. 2020 will be the first year where they create marketing campaigns aimed at parents and teens. And Smile Direct Club has lots of room to grow internationally, both in existing markets and in new markets that they don't ship to yet. But the biggest reason I've invested in Smile Direct Club and why I became a customer is I believe their value proposition is 10 times better than their competitors. Their aligners are cheaper, quicker, and far more convenient. This is why I believe Smile Direct Club will eventually take over this market. As long as this story stays the same, I'll hold on to this stock. If you like this video and you'd like to see more, go ahead and subscribe to my channel. It would really mean a lot. Thanks for watching.